Hello, welcome back, guys. Eventful day today because we are having a lot of earnings reports from well known companies such as Microsoft and Google. And so I'm going to go through these, and of course, we're going to be taking a look at the stock and the stock price and whether these are actually nice buys right now as they are falling because both Microsoft and Google are actually down. But let's just see what happened. Now, Microsoft actually beat on earnings, but stock dipped on basically mostly weak guidance is the main reason for this one, for this kind of drop. Now, of course, I'm going to be making a separate video for Google as well, and we can examine the finer details there. But where you will see here in our tool, remember that you can gain access to our tool here, and I'm going to be using that to do all sorts of valuations a little bit later in the video. But you can gain access by becoming a Patreon. All the links are in the description box below this video if you're interested. And you will see here that the stock price is actually down 6.6% after hours. So that's quite significant. And Microsoft is a company that I'd love to have to my portfolio, but it's been very, very expensive in the past. Now, is that still the case as it's going down, and it has been going down significantly in the past few days? We'll see. We'll take a look at that a little bit later. But first things first, let's examine what happened with the earnings report over here. Now, earnings, $2.35 per share versus 2.30. So they did beat on net income here, as you'll see. And in terms of revenue, 50 billion, 50.12 versus 49.61 that was expected by analysts. So they did beat here as well. So why is the stock down over here? And the stock is down because of the guidance numbers for the most part. And you will see here as this notices keep popping up over here, you will see that with respect to guidance, Microsoft sees 52.35 billion to 53.35 in revenue for the fiscal second quarter, which implies a 2% growth at the middle of the range. And they have been looking, the analysts that is, for revenue of 56.05 billion. So that's a significant decline based on, compared to what they were actually looking for in the upcoming quarters. And so, yeah, this is the main reason why you're looking at the stock price going down right now, even though 6% does sound like a lot, and it is a lot. The fact that the guidance is weak does account for this kind of drop. And this is why we're looking at it. And a lot of stocks, a lot of other companies are actually getting affected right now, with Meta, of course, being one of the top ones, being in the similar space, has been completely annihilated and is also down like 4% today. After hours, that is, even though it was like 6% up today during the market hours. So again, I guess it's a net profit for them. Okay, so in terms of the total revenue, this grew 11% year over year in the fiscal first quarter, according to a statement that you'll see here. And cyclical trends are affecting Microsoft's consumer business, is what the CEO said on a conference here. And this is something that is understandable, of course. Net income at 17.56 billion fell by 14%. In the year-ago quarter, the company had 3.3 billion tax benefit, and this is what actually pretty much adjusted for that. Now, in terms of the intelligent cloud business segment, which includes the Azure public cloud that we see here, it generated 20.33 billion in quarterly revenue, which is up 20% and slightly less than the 20.36 billion consensus. So that's still a pretty significant increase here. And the revenue grew 35% in the quarter compared with 40% in the previous quarter. So that's a pretty nice increase here in terms of what they are doing for cloud business, for the cloud business over here. So not much of a concern here. Now, of course, you can see all the pretty much the breakdown of what has happened here. The revenue from computers, from sales of Windows licenses, for example, which has dropped 15% or year over year, that is. And the result wasn't a complete surprise. We kind of expected, we knew that shipments in the quarter fell 20% almost year over year. It's something that is very, very well known here. And we do expect a weakness from all of these companies here, with Microsoft being the first today, pretty much having a significant decline in the earnings after their earnings report. Now, the thing is, as it is actually down quite a lot in the after hours, and it's already down about 30% year over year, actually this year, from its 1 year high, that is, you can see here in the 5 years chart that it hasn't been dropping a lot, but we're going to be having a decline of about like 32, 33%, something of that sort in total. When the market opens tomorrow, it looks like we're going to be having like a 6 to 7% decline for the stock price, which is probably going to open at $234 or close to that. And as you see, The P ratio currently is sitting at 26 and price to free cash flow at 28.7. This is already quite cheap here. And I mean, cheap for what it is, right? I mean, typically we want something that's closer to 20 or less than 20, really. But the thing is, we are looking at a company that has been amazing in what they are doing. Take a look at this growth over here. And as the stock price is getting cheaper, it gives us a better and better opportunity here, understandably. The thing is, the free cash flow has been growing, net income has been growing, total equity has been growing. It's a company that's doing amazing, pretty much. Take a look at these margins here. So this is why I'm saying that it is cheap compared to the ratios right now, which are actually even lower after the the market opens up tomorrow because of the decline. So this is going to be lower. Now it could go even lower, that's for sure. And during this kind of market that we are at right now, everything pretty much declines, and they could be declining for a while. I do fully expect that we're going to be having a few months of similar declines, or at least trading sideways, pretty much. However, we do want to examine whether this is a buy right now amid this pretty much report that Microsoft actually released. So is this a buy right now? You will see that the company has very little debt here, great returns, amazing margins is what I talked about, and also they are paying a little bit of a dividend here, like a 1%, which has a low payout ratio. You can kind of take a look at our dividends tab here, and you will see exactly what is happening. The tool can show you exactly what the company has been paying through the quarters. So that's nice to see. But what we do want to see for sure is the financial statements here, with the income statements going from 110 billion to almost 200 here. So a significant increase, a very, very great increase here in terms of the revenue. And the company is still growing the revenues and net income. Now, yes, they're going to be having some declines, it looks like, at least in the growth rate. But that's expected, especially during this current time where pretty much governments around the world have completely decimated economies. And in terms of net income, 16.5 billion to 72.7 billion over here. Take a look at this. An insane increase in net income that the company has been generating. This is a gold mine of a business here. In terms of their balance sheet, you will see that the total equity of the company from 82 billion, doubling pretty much to 166 over here. And you will see that the total liabilities they are over here, the total liabilities are sitting at 200 billion right now. And if you take a look at the cash flow statement, which we always want to see, is the fact that they are making 65 billion in terms of free cash flow. And remember, our tool here just tell you how much that is compared to the liabilities. This is about 3 years of 304 of free cash flow, of last year's free cash flow, to pay back all the total liabilities that the company has, meaning that it is a very, very solvent company. And if I go back here, you will see that the company has been having its net income, which has been increasing precipitously, insanely over the years. And you will see that the operating cash flow has also been increasing very nicely. They do seem that they're going to be cutting down on some expenses. They said that they will be cutting down on operating expenses. So you may be looking at operating cash flow being at similar levels or better in the upcoming years. Again, there could be some sort of a decline in terms of growth, at least, because the current market is pretty much bonkers. But overall, this is a fantastic business, as you can understand. In terms of the dividends, the company pays about 18 billion in dividends, which is roughly like 20% of the free cash flow or something of that sort. And in terms of the company's financing activities, they are basically, for the most part, pretty much repurchasing common stock, as you'll see here. They do buy quite a lot of stock, and that's another nice thing to see as a shareholder. You do want your company to be buying back shares, because now your stock is worth more when they do that. Now, of course, we do want to take a look at our stock evaluation tool, which will tell us how much to pay today for the company. And the revenue growth has been at 17, 16, and 17, overall at about 16 to 17, pretty much for all these averages here. And you can kind of see it over here. It's closer to 17 and 16 for many years, with some years that were higher and some years that were lower, of course. Now, we're going to go lower because in this current market, in the upcoming maybe couple of years, we do expect some declines, which could be followed by significant increases in growth, of course. But we're going to go a little bit safe mode over here. So we're going to go, let's just say 6%, 8, and 10 for the upcoming years. And in terms of the net income margins, the company has very high margins, as you'll see, near 36%, 36 over here also last year. So we're going to go still a little bit lower. So we're going to go 30 just to see what we get, 33 and 36. And in terms of free cash flow margins, we're going to go again very steady numbers here. 90, 100, 110. So I'm going to do exactly that, like 90. Whoops, not 09. I wanted to do 90. Let's go actually 95 over here and 100. Let's not surpass 100 because most years they're sitting around around 90 and 100. So an annual return of about 13% is the typical one that we ask for. And when we hit calculate, what are we getting for Microsoft? Now, the current price is going to be at 230 something, it looks like 33 or something of that sort when the market opens today. Since it's down about 6%, it's going to be like 12 bucks less. So the high price right now, it's sitting at near 200 bucks, the medium at 156 and the low at 123. With projections that are fairly normal, not too aggressive, not too conservative. So I think that I still need to be waiting for this one. I need to wait for a better price. Even though it's a fantastic business, I'm willing to pay more. I'd like to see it somewhere in between these two prices, frankly. Somewhere around 180, 170, somewhere around that. Maybe even a little bit more, potentially. Would be a nice, very interesting purchase for buying a company of this caliber here. I like what I'm seeing here in terms of the business, and it's a fantastic opportunity as it's going down, but I needed to go down a little bit more in order to get it at a better price and potentially pocket some extra money. But it starts to become very interesting here, and it's been like that for a while here, Microsoft. And so I'll be keeping an eye on this, and if it goes lower, if it goes maybe near 200 bucks, it may be time to reevaluate and maybe make another video about it. But thank you for watching. Remember to leave a like and subscribe. And stay tuned because I'm making another video right after this one about Google, which is the other company, the other one of the big companies that also had earnings report today. And it's also kind of going down. We can kind of see it here in our tool that if we take a look at Google, let's take a quick look. It's similarly at about 6.6% down. And so I'm following up with this video as well. So thank you for watching, and I'll see you very soon. Bye-bye.